Hi guys, Anthony here to talk about everything finance. As a finance professional, I've seen firsthand how Brexit has impacted the financial world. It's impacted foreign investors and how they want to invest their money into the UK. This has impacted lots of things. It's impacted the investment volumes, but also how much the pound has gone up and down, making the UK more attractive or less attractive for international buyers. As we know, if the pound goes up and down, it's also made our holidays more expensive, so it's impacted everything that we do. But firstly, let's take a little bit of a rewind and understand what has happened with Brexit, where it started and where we are right now. If we go before 2020, in a time when we could see our friends, see our family and not have to wear masks everywhere, we transport ourselves right way back to June 2016. In June 2016, the UK voted to leave the EU. It was a vote of 52% who wanted to leave and 48% who wanted to stay. As you can imagine, with 48% of the population wanting to stay in the EU, it wasn't an easy transition, and it's taken 4 years to discuss whether a deal will happen or there'll be no deal, will we be able to go on holiday to the EU or will we not be able to go on holiday, will we be able to trade with the EU or will we be able to just have to manufacture everything on this little island that we call the UK. The vote was the government allowing us to decide whether we wanted to be part of the EU or just be our neighbours and say we want to be towed to the middle of the Atlantic Ocean and leave you all behind. As it turned out, 52% of the population wanted to leave the EU behind and make the UK its own little nation outside of the customs union. As we've been part of the EU for so long, it's meant that our laws in the UK and EU laws have really intertwined, making unpicking them extremely difficult. As a population in the UK, we've been through a lot. We've had multiple general elections and there's been multiple votes in Parliament to decide if we're going to have a Brexit no deal or we can continue negotiations. And then right at the end of 2020, there was a deal that was agreed between the EU and the UK, which meant that on the 31st of December, the UK officially left the EU. So now we've left the EU, can we all get back to our lives again? Not have to worry about Brexit and see those 4 years of headlines telling us this is going to happen, no, this is going to happen, and we're all going to lose our money and our jobs? Well, not so quickly. Unfortunately, this is just a start. We all have to remember that back in 2016, the whole Brexit vote made the UK an unattractive place for investors to invest into. It's a bit like finding out that someone you fancy hates all your friends, and that's not a good look. As a result of the Brexit vote, the pound dropped significantly. This meant that actually investing into the UK became significantly cheaper, and as we know, if anyone went on international holidays, that holiday became a little bit more expensive. People rushed to withdraw their money. They wanted to withdraw their money from the banks, but also investment funds. And one sector which was hit particularly hard was commercial property. As you can imagine, London is a financial hub, so it has lots of people who come and go into the city. This means they trade a lot of financial assets with the EU. And as the UK has left the EU, it meant that there were big question marks on whether banks would be able to employ as many people or do as much business with Europe. What people expected was a big exodus of financial jobs moving to Europe. However, ultimately, that just hasn't happened over the last 4 years. But one thing that is for certain is that over the last 4 years, we've been stuck in this limbo period. Personally, working in the finance industry, I've seen how a number of investors, particularly those based in Europe, don't really want to invest into the UK. They're not sure how that relationship will continue to work. They don't know that if they invest into the UK, they'll actually be allowed to take their money out, or they might be taxed in a different way. This uncertainty means that big pension funds and big insurance companies who are based in Europe, say in Germany or France, are looking at the UK and not really sure if they actually want to invest. And as a result, commercial property prices in the UK are actually, on a value basis, cheaper than they are in Europe. As you can imagine, that these banks and insurance companies don't like uncertainty. They are worried that with uncertainty and different legislations, they might be treated differently, maybe taxed more, or might not be able to get their money or investments out of the UK. As a result, they haven't actually invested into the UK. Now that the deal is agreed, it means that investors are now a bit more positive about what's going on in the world. They know that now that there is a point in which people are trying to work towards, that the EU and the UK can work towards a trade agreement, which is good news for all investors. What we have to consider is that businesses and companies that do trade with the EU are going to be hit with more bureaucracy. They'll have more forms to fill out and maybe potential tariffs, which could impact investments and profitability. A couple of things that we do know about the deal so far is that the UK has been able to control certain things outside of the EU's remit. The UK will be able to control state aid, for example, how much the government supports certain industries, say such as the steel industry, and fishing rights. As an island, we have lots of sea, which means that fishermen can fish to their heart's content, not having to worry about EU limits and quotas. We also have to expect that there are issues with travelling to and from the EU. Companies such as EasyJet have already set up subsidiaries out in Europe so they can travel within the EU, because new laws mean that companies that are based in the UK won't be able to fly within Europe. Also, travel is a big concern. If you're anything like me, I love going on holiday to Europe. However, holding a British passport, you might not be able to do that quite so much. There might be certain quotas and maybe you even have to get a visa, which will be a big headache, as I know that I love hopping on a plane and going to Europe for a weekend. However, there is one big issue which needs to be clarified, and it's the financial access which the UK will get to Europe. As I've already mentioned, and you probably already know, that London is one of the biggest financial hubs in the world, and is by far the largest financial hub in Europe. It does trillions of dollars, euros and pounds worth of trade with Europe and the rest of the world every single year. Its big benefit is that it's set in the centre of the world, meaning that it has easy access to Asia and North America. However, to maintain its position as the financial centre of Europe, London needs access to other financial centres such as Frankfurt, Paris and Zurich. This is still a negotiation point, so this could heavily impact how we trade and how finance professionals like myself go about their everyday work. I know you might not think this really matters, but all of our banks do trade with certain European counterparts, like European investors or other European banks. Without access to this money, it means that investors may not really want to stay in the UK. They might move to other places in Europe or other places around the world. This is something that we all have to look out for, as finance jobs in London obviously are a big employer in this country. This means that the UK government takes a lot of tax from these people, but also landlords in these London office buildings have tenants who are banks or finance related. This means that the London office market, for example, could go crashing down. This hasn't happened over the last 4 years, but we just don't know how the impact of Brexit and the deal that's been negotiated could heavily impact the finance industry moving forward. However, what we have to remember, after 4 years of hurt and 4 years of negotiation and 4 years of limbo, that a deal is done, which is positive news. And in the short term, markets have reacted positively. The pound has got stronger, so it's good news that we've got a deal done. At the very least, it means that after 4 years, we can now have a little bit of progress and maybe a little bit of clarity. So watch this space for updates. We don't know if Brexit is going to be good for the UK, bad for the UK, good for the EU, or bad for the EU. What we do know is things are going to be different. There'll be a lot of bumps along the way, so we need to make sure that we're up to date and understand how this can impact our money. So when the UK decided to leave the EU, it was obviously pretty negative, from particularly investors from the outside looking in. It impacted companies who are based in the UK or listed on UK markets such as the FTSE 100. There is obviously a lot of things that could happen between now and a deal being completed. We've already seen news articles this week on how there could be different tariffs imposed and how there could be waivers for companies who are transporting goods to and from Europe. And one thing we have to remember, that right now we're in the midst of a pandemic. If there wasn't a pandemic, then we probably would be hearing more positive news and hearing Brexit all over the news every single day. Right now, the impact of Brexit is probably a little bit muted because the pandemic is impacting our lives so much more. But with more clarity coming out over the next few months, then expect investors who have been waiting in the sidelines to make a decision whether they want to invest into the UK or not to invest in the UK. I personally think that investors who have been waiting on the sidelines, who haven't invested because of the uncertainty, will look at the UK as a more attractive place to invest. This will mean that the pound will get stronger and commercial property prices will get more expensive. Meaning that right now, even though the UK is maybe not as attractive as it was, it will just get more attractive. It means that investors who are based outside the UK will be looking at the UK to invest, be that in the stock market, the bond market, or the real estate market. So I'll keep you updated on how the markets, such as the real estate, stock market, and bond markets, react and what other news that we get from Brexit. I hope you've enjoyed this overview of Brexit and how this is impacting the UK moving forward. If you have enjoyed today's video, please make sure you hit that like button. And if you haven't subscribed already, hit that subscribe button. And I'll see you next time.